You know, 16 years later, and $2 trillion of proof later, and after who knows how many millions of pages of wisdom have been delivered to the world, I'm able to give you this speech. But someone much greater than me, Satoshi, with none of that information, with none of that proof, with none of that time, said this many, many years ago, the most important 12 words in the English language. It might make sense to get some in case it catches on.
Michael Saylor just dropped another Bitcoin masterclass. But what does it all really mean? Today, we break down his most powerful ideas at the recent Bitcoin 2025 event, one clip at a time. Let's get into it.
You've mentioned that simply holding Bitcoin is enough, but would you ever consider building something like a Bitcoin bank, or does that go against your philosophy?
A bank is a regulated, or it's a reserved term in Western civilization. So right now it means a company that takes business or retail deposits. It's regulated. If you're a regulated bank, you might actually be prevented from doing other financial things. So we don't have any plans to be a bank. We're much more enthusiastic about pioneering the world of Bitcoin-backed credit instruments. We want to have, the premier Bitcoin-backed equity and Bitcoin-backed credit, and so it's a set of financial products, but not a bank.
This is Classic Saylor. He's not trying to become your everyday financial institution. Instead, he wants MicroStrategy to be the Goldman Sachs of Bitcoin, issuing bonds, credit, and equity, all tied directly to Bitcoin. And by staying out of the banking system, he avoids regulatory handcuffs that come with being a traditional bank.
All right, Michael, a lot of people believe in diversification, but you've gone all in on Bitcoin. What gives you such strong conviction in that choice?
Well, Bitcoin's the only digital commodity, and if you're going to be a public company, then you need to be capitalized on a commodity. And Bitcoin is the first commodity in the history of the world that outperforms the S&P index on a consistent basis. So if you are a public company, it's a very simple choice. There's one best asset, and there is no second best asset, right? I'm an aeronautical engineer. I have conviction in Bitcoin like you have conviction in using aluminum to build an airplane. And the reason you use aluminum to build an airplane is because if you use steel, the plane won't fly. So Bitcoin works for a public company because it's higher performance than the S&P, and it's more volatile than the S&P, and it's a commodity, and so you can go to 100% leverage. And every mathematical model you can possibly work through indicates that the right answer is 100% Bitcoin. If you diversify that, all you're doing is bleeding off, diluting the volatility, which devalues the options. When you go from 100 vol to 40 vol, your options market would go from 100 billion to a billion. So you're going to destroy your own options market. And if you dilute the Bitcoin with anything else, you would destroy your performance. And so the first order answer is it makes no sense because the options are destroyed and the equity is destroyed. The second order answer is you can't build a Bitcoin-backed convertible bond or Bitcoin-backed convertible preferred stock or Bitcoin-backed fixed income preferred stock if you're not Bitcoin-backed. If Berkshire Hathaway, for example, were to buy $100 billion worth of Bitcoin tomorrow, they might have more Bitcoin than us, but they couldn't issue equity and credit instruments that have Bitcoin's performance because they would be diversified. And so at the end of the day, it makes sense for us to be 100% Bitcoin because it gives you the first order best result, and then all of the securities that we build inherit the volatility and the performance of Bitcoin. And we would, in essence, be destroying, we're crippling our own securities and crippling our own performance to diversify.
Saylor's take here is radical, but it's consistent. He sees Bitcoin as the only capital asset worth holding. Think of it like this. If one engine flies better than all others, why bolt a second, weaker one to your jet? His point is that diversifying isn't safe. It's just slow suicide for your portfolio, especially if you're a public company trying to maximize shareholder value. This is a challenge many investors, myself included, often face. Fear of missing out tends to drive over-diversification. But what Saylor is suggesting here is simple. Instead of spreading yourself too thin, just invest in the top-performing company or asset. By focusing on the best, you're more likely to outperform a heavily diversified portfolio.
You guys talk about the importance of marketing and memes and memetics in your guys' boardroom. How important is that to what you guys are doing?
I think we live in a world of abundance, and there are more messages and there's more entertainment. You can sit and you can watch Magnus Carlsen chess videos, and you can almost watch an infinite number of commentators commenting on the same chess game by Magnus Carlsen if you want to go down that rabbit hole. There's infinite everything, infinite entertainment, infinite message, infinite news, and everybody's overwhelmed and bombarded. And so it's important that if you have a message that you condense it down to something which is very efficient. People don't have time to read 30 pages. They don't have time to read 2 pages. They probably don't have time to read 2 paragraphs, right? If I were to write a book on why Bitcoin is the superior investment asset, 0.1% of the people would read the book in a decade. If I simply said there is no second best,
Amen.
and if I can get like a 3-year-old kid with a beard to say there's no second best, like baby Saylor can get the point across 1,000,000 times as efficiently. And so I think that these are important because you just can't spread the information efficiently enough unless you put it into a viral package.
This is where Michael Saylor blends smart strategy with modern internet culture. He understands that we live in a time where people's attention spans are short, and the competition for that attention is fierce. In this new world, attention has become the most valuable currency. You can write the most detailed, well-researched white paper explaining why Bitcoin is the best asset. But the truth is, very few people will read it. Most people scroll past long articles, especially if they're full of technical jargon. Saylor knows this, so instead of only focusing on complicated arguments, he turns his ideas into simple, memorable messages that can spread fast. Take the phrase, "There is no second best." It's just 4 words. But when a toddler says it with confidence, and that clip gets shared all over TikTok, Twitter, and Instagram, it becomes a viral moment. People laugh, people remember it, and more importantly, they repeat it. That's the genius of Saylor's approach. He's not just trying to win debates, he's trying to win the culture war. He turns his core beliefs into memes, short, catchy, emotionally powerful messages that stick. It's not just marketing, it's what some call meme warfare. And in this game, he's playing at a very high level. By using humor, kids, sound bites, and viral clips, he makes Bitcoin feel like a movement instead of just an investment. That's how he gets more people to listen, believe, and eventually join the cause. So while others are busy writing long reports that no one reads, Saylor is turning simple phrases into global campaigns. And in today's attention economy, that might just be the smarter strategy.
So do you think it's possible for MNAV to drop below 1 in a bear market? And if it does, how would that impact your strategy?
Yeah, I think an important point on that is sometimes I see like Twitter analysts saying, oh, this is just like GBTC and Grayscale went below 1 times NAV before. And what they miss is that Grayscale was a trust company, a closed-in trust, and we're an operating company. And a trust company doesn't have the option to refinance or take on leverage or to sell securities, buy securities, recapitalize, or buy their own stock back. It's just a form of corporate entity that has no operational flexibility to manage its capital structure. Operating companies have much more flexibility. We can buy stock, sell stock, recapitalize. We can take on debt to fix or to close a gap. So at the end of the day, I think that the one example people have in the crypto market, Grayscale trading below NAV, was because it was a trust, not an operating company. Theoretically, here, when an operating company or a company doing something trades below NAV, it's because the investors have lost faith in the management team, and they think the management team is destroying shareholder value by acting irrationally. So for example, if I were to give myself $1 billion a year pay package and announce it, the stock would dive, and people would say, what if I just said, hey, I have $64 billion of Bitcoin, I'm going to pay myself $1 billion a year for the next 64 years. People would lose faith in the company. They would say the management team is looting the shareholders. They dump the stock would trade below NAV.
Here, Michael Saylor is basically saying, don't lump MicroStrategy in with Grayscale. We're not the same. Grayscale is a company that runs the Grayscale Bitcoin Trust, GBTC, which is a type of investment vehicle called a trust. When people buy shares of GBTC, they're essentially buying a way to get exposure to Bitcoin without actually owning Bitcoin directly. But the problem with a trust like Grayscale's is that it's very rigid. Once Bitcoin is inside the trust, it can't be easily moved around. It can't make business moves. It can't issue new types of shares. It can't change strategies quickly. It's kind of like a big cargo ship that takes a long time to turn around. Now compare that to MicroStrategy, which is not a trust. It's a regular operating company, like Apple or Microsoft, that just happens to hold a massive amount of Bitcoin on its balance sheet. But because it's an operating company, it has way more financial flexibility than a trust ever could. That's what Saylor means when he talks about MicroStrategy's ability to do financial jujitsu. He's saying they can do a bunch of smart financial moves that Grayscale simply can't. For example, if MicroStrategy's stock price drops and becomes undervalued compared to the amount of Bitcoin they hold, they can buy back their own stock, reducing supply and boosting value. They can refinance their debt, meaning they can restructure their loans and interest payments to improve their financial position. They can issue preferred shares, which are a special type of stock that allows them to raise money without giving up control of the company. They can even sell more stock or raise cash in creative ways, and use that money to buy even more Bitcoin. Basically, they can move fast, adapt to market conditions, and take advantage of price differences in a way that Grayscale just can't. That's what he means by arbitrage the system, using clever strategies to take advantage of how the market works in order to create value. So when Saylor says, don't compare us to Grayscale, he's really saying, they're stuck, we're agile, they're like a vault with Bitcoin inside. We're a machine that keeps building, buying, and growing. And we know how to play the financial game to win. It's not just about holding Bitcoin, it's about what you can do with it. And MicroStrategy, in Saylor's view, is playing 4D chess, while others are still figuring out the rules. So here's what you need to take away. MicroStrategy isn't just holding Bitcoin, they're building financial infrastructure around it. They're not diversifying, because in their world, Bitcoin is the diversification from fiat. They're using memes and memetics to dominate attention. And most importantly, they're maximizing optionality, so they can pivot no matter what the market throws at them. If you got value from this breakdown, hit that like button, subscribe, and tell us in the comments. Do you think Saylor is genius or just extreme? See you in the next one.